factor investing. That's going to be the focus of the next conversation. Joining me to talk about it is Rajiv Shastri, who is Director and Chief Executive Officer at NJ Asset Management Private Limited. Thank you so much, Rajiv, for taking the time. Good evening to you. Let's start with a bit of a primer, if we can call it that, on factor investing. For those of my viewers that are not familiar with the concept, how does it work?
Thanks for having me here. I think, as a dedicated factor investing, fund house, I think we are, kind of always very interested to speak about, factor investing and how we invest. To start from the basics, factor investing can sound very jargony to people and, kind of intimidate them as to this is like something new that we're trying to do or something strange that we're trying to, implement. Think of factors as features, right? So just as when you buy a car, you look at the features of a car. When you buy a phone, you look at the features of the phone to decide what balance suits you best. Factors can be considered as features that we look for in a stock. The balance that we try to find is based on our understanding of what, we consider best to be, what we consider appropriate for the time being. So, but the way of going around identifying these factors is based on the past data that has been generated, either by the company at a fundamental level through their financial disclosures, or the price and volume data that is available in the markets. So we analyze all of this data that is being generated by companies over a long period of time and try to identify the features that each company has. And based on these features, then we try to identify a portfolio which suits us best.
Fair enough. Now, as I understand it, there are several factors that can come into play, numerous factors in fact, but there are a few predominant factors that are globally recognizable, that are followed in several markets around the world. What are those few factors that get a lot of prominence?
Okay, so there are globally 5 factors which have been, proved to be dominant in the sense that they are meaningful contributors to the performance of a stock. Right. So there's quality, there's value, there's momentum, and there's volatility, low volatility, of course. So your lower volatility stocks is what you're looking for. And then there's size. Internationally, size is a very large factor. In India, unfortunately, as you go down the size ladder where, the theory that smaller companies do well over longer periods of time starts breaking down because you don't have enough liquidity at the lower end of the, capitalization ladder. So size in India is best, kind of kept aside for the time being till such time that we develop widespread liquidity. So there are 4 factors that we can use in India, which are implementable, which have proved to be pervasive. So these are quality, value, momentum, and low volatility.
Now, if I look at the global scenario, if I look at a market like the US, factor investing has been around for some time. It may be relatively new in our market, but there have been those that have questioned its, shall we say, success as opposed to traditional modes of investing. How would you look at that and look at that commentary in the context of what is trying to be built out here in India?
So one large difference between developed markets like the US and our market is the fact that markets there have data which is which they've accumulated for close to a century now, which is missing in our country. We've just about gathered about 20 years of data, which covers about 3 market cycles. Right, so that's one of the first challenges that we faced in India was data. And there's while data is available, but it's dispersed. It is available, different data is available to different service providers. So if you go with one service provider, for example, you might not get all the data that you need to implement a factor strategy very well. So that was one of the challenges which I'll speak about more, a bit later. But you're absolutely right. Factors have been implemented, factor investing has been implemented internationally, and some factors have worked and some haven't. One of the factors that has actually not, worked very well over the last, decade or so, especially after the global financial crisis, 2008, 2009, is the value factor. And a lot of people, therefore, has, a lot of attention, media attention, as well as commentary has been focused on the fact that that value is not working. We believe that, if a factor is not working, it's not about the factor itself being flawed, but about how we are measuring the factor. And therefore, we need to figure out how to measure it better, how to parameterize it better so that we can make it work. See, factor investing is I mean, the starting point is intuitive. I mean, value investing, right? How can one deny the fact that if you were to buy a good company at lower than its intrinsic value, right, at a price lower than its intrinsic value, you should make a you should make a gain that is higher than a normal gain, that an abnormal gain. You should be able to make an abnormal gain. If you invest in a high quality company over a longer period of time, that company should be able to compound at a higher rate. If a company is moving with positive momentum, it's like a cycle. Once you get it moving, even if you stop pedaling, it continues to move for a while, right? So these are all very intuitive, very logical things. The challenge to our mind is figuring out how to measure them and how to parameterize them better, so that we can implement them in in a jurisdiction in a manner that is best suited to that jurisdiction.
Fair enough.
There are a couple of examples I can give if you would, if you have the time, I can give a couple of examples if you want.
Fair enough. But then in that sense, would you say that momentum is a better strategy to play here in India? And if someone were to try to utilize a factor in their overarching strategy, how would they do that then?
Okay, so momentum is one of the simplest factors to implement because all it needs is price data. Right? You don't need anything else. You don't need to know anything about the company. You just need price data over a predefined period of time. Momentum basically, all you need is price data, and you can implement momentum very, very easily. The problem with momentum, it's very fickle. Right? It turns around very, very quickly, so it can turn around on a pinhead, and a stock that is exhibiting positive momentum can turn around very quickly and start exhibiting negative momentum. So since it's fickle, it needs a lot of oversight, needs very, very close watch, and it can turn out to be extremely volatile. So these are two caveats that one must keep in mind when executing a momentum strategy, because otherwise it can be a really, really rough ride. You might get a higher return. That's not the entire point of investing, but you should be able to last the journey as well.
The final view then on factor investing, do you anticipate that we're still in early days? Do you anticipate that in the coming few years, couple of years, you will see a lot more in the way of products, a lot more in the way of data and measuring of that data?
So let's start with the availability and measure and accumulation of data. So like I said, anyone using just a single data source is not equipped to do factor investing, because no single data source in India is foolproof. So we need to accumulate data across various data sources, which is what we've done, and set up our own data warehouse, which we use to then basically analyze and power our investments. Now about whether it's at a nascent stage. So there are learnings from overseas which we can transport out here, but we have to be very careful when we try to implement them in toto, because there are some things that just don't work out of the box in India. Value, for example, in India we have these companies which are perpetual value companies, which have been trading at lower than any intrinsic value calculation for a couple of decades now. So we have to figure out how to exclude those, otherwise the value factor stops working. So there are techniques that need to be kind of changed and adapted to India. We've done a lot of the work that is required for that. Obviously, it's not foolproof yet. So, there is, like any human fund manager, there will be times when, a certain strategy or a certain factor won't work. And there will be times when the entire factor investing, thesis won't work. And these periods of time have to be, you have to write these out, just like you do with an active fund manager. So, going forward, yes, today we are India's only dedicated, factor investing house. I think going forward, we would see many more of us, many more of, these dedicated houses. And I think that's when, widespread awareness of factor investing will increase, and, we'll see more and more people getting getting enthused by the possibility. We've had a stupendous response to our offerings. So that's been extremely good for us.
Yeah. No, you definitely, Rajiv, and I'm glad that I'm able to speak to you about this, and we will continue talking, I'm sure, over the coming weeks, months, and years. This is not going anywhere. Thank you so much for taking the time.
Thank you so much.